Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a brief discussion of the current market sell-off and what to expect next, and also ways to hedge your portfolio. Before we begin, please take a look at the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, so let's take a look at the market. First, let's look at the spiders. Looking at the stock forecast toolbox, usually I reference on a weekly basis. For the next 10 days, we see strong momentum to the downside, kind of continuation, even before today's sell-off of the market correction that we've seen throughout this week. Now, with the current market sell-off potentially reaching 277, 280 level. As I said in the market commentary in the past, I think we're still in the late stage of a bull market. I don't think it's too early to become very bearish on the market. I think there will be some kind of an agreement between China and the United States. We still potentially will raise the tariffs from 10 to 20% on the first $200 billion tranche. But I think the market overall is still growing, and we had a good earnings season. So I think 280, 277, which corresponds to the 200-day moving average, is a strong support where I would consider going long if the market reaches 280 to 87, which is not that far from the current price level, which is at 283. Now turning our attention into a different model. This is the seasonal chart. Uses model that we run on Sunday at 6 p.m. Makes predictions for the next 20, 30, 40, and 50 days. You can see 3 out of 4 predictions were posted lower on Sunday before the market sell-off. So model already detected that 294 was an overhead resistance, and that in the next 50 days that the market will trade lower with 80% accuracy. You can see the accuracy. Looking usually at May and June, with 95% correlation to historical prices. If you look at the historical prices and what the market is doing right now, this is an expected behavior that usually May, June is bearish market, trades in a sideways range, potentially retracing back, but we don't expect 10 to 20% correction in the market. What drives the market? Obviously, tariff negotiations. On Friday, we're going to make an announcement. I think if the announcement is just raising the tariffs to 20%, and just delaying an agreement, I think the market will hold to 80 level. I think both sides want to reach an agreement. So 280 and 200-day moving average is where you want to start repositioning your portfolio and building long positions. I think if we will impose additional 10% on an additional $300 billion, that new information that could potentially pull the market below that level. So how do we trade in the current market condition? One way to do this is to do the hedges. So this is an example where I was long 255 to 60 call spread. When the market starts selling off on Monday, I decided to close the position because of the uncertainty in the market. Doesn't make sense to hold the position. So close the position at 363, basically a small loss, breaking even on the position, slight loss. Currently trades at 270, and I introduced a hedge, $1.95 hedge, selling 264 to 69 call with the idea that Dow Jones will not break by June the 264, 269 overhead resistance, was able to collect $1.95, currently trades at $1.40. So I'm able to reduce my cost basis by 50 cents. So now this position has actually turned positive. And as market sells off, I'm start slowly building my long position and rolling what June position into July or September position, depends on which contract is trading, giving myself lower cost basis. So instead of being bullish at Dow Jones at 255, now I'm bullish at Dow Jones at 245 support level, and rolling the strike prices down and further away for basically breaking even, right? So I was able to get into the same trade, but at much lower cost basis and giving myself more time for the trade to realize. As we see right now, we are at 28.50. We were as low as 28.36. on S&P. The current support, we broke the 50-day moving average. We're now trading below the 50-day moving average, which is a bearish for the market. But we do see more, going back to 1 year and further, the strong support at the 280 level. So I think 2800 on SPX, potentially breaching and reaching the 200-day moving average at 276, 2860. That would be another level to around 2870 is the level here, which you can see 2700, 2740, 2760, which corresponds to the 200-day moving average. And you can see we've been averaging in the live trading room. We do all the trades, both hedging and going long. We've been accurate 75% of the time. Another way to hedge the position, this is a trade idea which we hold in the robo-investor position, is buying VXX. If the tariffs are going to be imposed, I think short-term market is going to continue sell off, potentially reaching to 77 to 78 level on SPY. So buying VXX short-term makes sense to hedge your overall portfolio. And finally, please join us. We have 3 different live events: Active Investor Workshop, a live trading room for our paid subscribers. Active Investor Workshop is free for everybody. So please join us on May 14 at 3:30. We're going to talk about tools and strategy that we use at Tradespoon to trade in current market conditions. Again, that link is tradespoons.com/workshops. And finally, please follow us on social media for all the latest market commentary and news. Thank you very much and have a great day.